All right. Hello, everyone. Welcome to another week of webinars here at Route Consultant. This particular webinar focuses on bread routes and the bread route industry. I'm Leah Nelson. I'm part of the education team here at Route Consultant. I usually focus on the financial and analysis aspects of different businesses and industries, which is really applicable to today. So today we'll all be coming together to learn more about the bread industry and answer any questions that you all have. So if you've never joined us for a webinar before, we do follow a certain format. So first, we will cover the content of the week and a couple of updates. And at the end, we'll leave time for a Q&A session if anyone has any outstanding questions. The questions can be pertaining to today's topic or really anything related to the bread industry. We want to answer any questions that you've got and just be as helpful as we can. So if you're watching from YouTube later on, since you won't be able to basically answer or ask any questions in our live format, you can email us at info@routeconsultant.com if you do have any questions, or you can join us for next week's webinar and ask those questions live. Speaking of questions, if you do have any questions at any point during the webinar today, make sure that you are dropping those in the Q&A function at the bottom of the screen. If you put them in the chat function, I probably won't see them, so they probably won't get answered. So make sure that you're dropping them in the Q&A section. So if you have joined us before, you know that Stephen is our resident expert for the bread industry. If it's your first time with us, Stephen has been working in the bread industry for quite a while, and he runs routes with a couple of different bakeries. If you do want more info on Stephen and his background, I encourage you to visit our YouTube page and watch our very first bread webinar and get that information. And we've actually got all of our webinars posted on YouTube if you just want more information about the industry as a whole. So today we'll be chatting about financing options for bread routes, which I know is always a really hot and exciting topic. So with that, we'll go ahead and welcome Stephen on.
Hey, Leah, great to be with you.
Yeah, absolutely. Excited to be here. I think it's our first webinar together, so that's always fun.
Yes.
Perfect. So we'll just jump right into it. I know there are, lots of different options for financing bread routes. So I know we'll kind of start with the first one, which is really popular, which is in-house financing, which is different really across the different, bakeries and things like that. So why don't you tell us a little bit about that?
Yeah, so this is really where bread routes kind of shine. So in the logistics space, it's really unusual to see a business where you can find financing in-house or even, a company that's going to co-sign on a loan for you. To allow you to really enter this market. So it's going to vary depending on companies. Companies such as Bimbo, they're going to finance at a flat rate, which is typically around 13 to 1. They're going to do all that in-house. And so they're going to have the ability to deduct it from a settlement statement if you wish. They're going to have maybe a little better terms than you might find at a bank. But really the ease of access to capital is really what shines in this space. Pepperidge Farm's a little different. So they look at the selling ratios in your area. So that's going to vary a lot by region, by cookie, cracker business versus bread business. And so you're going to see a wide range. What they're going to do is they're going to take the last 3 sales of contracts in your area. They're going to average those out, and they're going to loan somewhere between 80 to 85% loan value. And all that's going to be co-signed by Pepperidge Farm to major banks such as Bank of America or Wells Fargo. So this is also a great way to really, access capital where you don't have to do it in-house. It circumvents the SBA, other traditional lending opportunities where there's just a ton of paperwork and you never know if you're going to get approved. So this is really appealing and makes it easy to really enter the space.
Yeah, absolutely. I know ease of financing is a huge sell, particularly since you said in-house or like just, that you don't have to have these crazy qualifications or this crazy process to go through when getting financing can be really helpful. So what are some of the kind of interest rates, terms you see, or any qualifications or prerequisites that a buyer would need to get one of these loans?
Yeah, so first entry point is much like when you're qualifying for a mortgage, you're going to need to submit a financial application. They're going to look at a background check, make sure that you haven't filed bankruptcy in the last 7 years. They're going to do a credit check to make sure that you don't have too many outstanding debts, that you can afford the route payment. And then they're going to look at credit score, and you're going to see interest rates fall into, currently they're in the 7 to 9% range. And so they kind of mimic the SBA or what you would find at a major bank for a line of credit. So they're very attractive, and of course you're going to see 5 to 10 year terms. and these are going to be fixed rates. So a lot different than what you see at the SBA where it's variable. We all know that we're in a inflating interest rate market right now, and so probably the only place they're going to go in the next short term is up. So this is really attractive to lock in with a fixed rate on a 5 or 10 year term.
Yeah, absolutely. But the fixed rates that's incredible. That's because I've worked with a lot of SBA loans in my time, and watching those rates just shoot up is stressful from that perspective. So having that fixed rate is definitely an advantage. What say a buyer is buying a route and the route is more expensive than what the in-house financing is able to do. What would a buyer do in that situation to cover that gap?
Yeah, you have a couple options here. So, of course, bring in cash to the table if you have that available. Some really attractive routes may sell for a little more. One of the things I found when I moved over from an employee of a company such as Frito-Lay to an independent operator is, there's a hierarchy. There's guys that are tenured at employers. They've been there 20 years and they have the premium routes. These are easy to service. They're the least driving, and it takes years to really get to that point. That's not the case when you're purchasing a route. So you can find something that's really efficient, something that cash flows well, and that may cost a premium. And so that may go slightly over market rate. And that's not unusual. So bringing cash to the table is a great way to do that. Seller financing is certainly an option. You can discuss that. And I know Route Consultant has a great team that can help, draft agreements like that.
Absolutely.
So you have a lot of options there. You really are able to work with the seller and find something that works for both parties.
Absolutely. Speaking kind of to seller financing, I know it's possible in the space, but is it something that you see very often currently?
I haven't personally seen that a lot. I know it has been done. Most of the time, route guys, we're either looking to cash out, we're looking to purchase a different route. And so holding back that equity may be a little difficult. Of course, each situation is different. If you've inherited your route and you're looking to just slowly ride off into retirement, you certainly can owner finance something over the long term, as long as you have a good relationship with the buyer and you have clear expectations and you have a really good contract agreement so you understand, what happens in a worst case scenario and everybody's protected.
Yeah. Yeah, kind of speaking to seller financing, at least, we've done it in other industries and silos as well. Seller financing can be really good if the sellers, if you are on the fence about it, it could be a great way to make a little bit more money over time too. You get payments, on a regular basis, but you do get to collect interest on those in most cases. That's going to be negotiated between the buyer and the seller, but you do get more money over time if you choose to do a little bit of seller financing, which I know can be an advantage. And Stephen, like you mentioned, we here at Route Consultant have tons of document templates and everything. So the seller is protected. You've got those documents, those contracts in place with the buyer to make sure that you're not going to lose your money. And there's protections in place. So I know it may not be super common in the bread space right now, but seller financing definitely has its place and can be an advantage as well, even though you're getting paid a little bit later. Perfect. So I know we kind of mentioned SBA a little bit earlier, but have you seen SBA as an option for bread routes, or are most people doing the in-house?
It is an option. Certainly, there's a little bit more stringent qualifications. You are working with a variable rate loan. There's lots of paperwork involved. So it's certainly an option if you can find a bank that is familiar with it. A lot of these are not particularly familiar with route contracts. And so most people go the traditional route. But really another one that people might consider is, home equity line of credit, a lien against a rental property. Oftentimes you're able to spread that loan out a little longer, maybe 15, 20, 30 years. You're going to have better cash flow off the route. It'll allow you the opportunity to build the business, maybe split off and sell off some of your business and recollect some of that capital expenditure that you put out up front. And then you have a route that you pretty much didn't pay for. So there's some options there if you have that ability and you want to go in that direction.
That's great. Yeah, and the 10 to 15 year term the longer terms definitely would bring in more cash on a weekly, monthly, annual basis, which I know a lot of people are looking for. So that's great. And the SBA too, just to add a little bit to that. Bread routes, it is an option. They're a little small for most tastes for the SBA if you're buying just one route. So it may be an option, but I would recommend in most cases going with the in-house financing first, and then maybe trying the SBA if I don't know why the in-house financing wouldn't work, but The SBA rates are a little bit higher too. You mentioned they're variable, and they can be done with the SBA. They're just a little bit small for most of the SBA lenders to really be super enthused, I would say, about them. But yeah, definitely an option. So perfect. Is there, what other things is there anything else that buyers need to know about financing? Any other tips, tricks, options?
Yeah, I would definitely have a plan, lay out your goals. That can really help you evaluate the best path forward. If you're planning to, build these routes, split them, sell them, if you want to build them, hold, start hiring employees, growing that way. So always start with your goals, and that'll allow you to find the best path forward. Other than that, these are really, really attainable, 15, 20, $30,000 up front to really get started in the space. There's a fairly low barrier to entry. So that I have found is a really great positive. And then you're gonna have a really consistent business. Everybody needs groceries, and you're not reliant on freight. And so there's lots of work to be had. And so I found that the bread space, the financing options, the ability to split off sell business has been really attractive to me.
Yeah. Speaking, one more question kind of too, you mentioned selling off pieces of your business. If you do with the in-house financing or the financing through a bakery, are there any penalties for paying it off early? Or, if you sell a business before your loan is paid off, how does all of that work?
It's going to vary depending on bakery, but most of the time, if you sell the business, they're going to want to clear the loan first. And so if there's any remainder, you're going to get that in cash, but they're going to clear the loan balance first before you receive any money back.
Perfect. But no prepayment penalty normally, do you think?
Not that I've seen. I can't tell you definitively,
Yeah.
but I can find out about that and get back with you.
Yeah. I know I don't believe the SBA has any prepayment penalties, and I figured they probably wouldn't, but definitely always worth asking. So perfect. I mean, most of the questions that I had on financing, it's pretty straightforward in the bread industry, which is great. Like I said, it's not always like that in other industries, and sometimes finding financing is hard. In-house financing is definitely an advantage. So again, anything you add before I hop into some updates?
I guess the last thing I would add is if you are, for your down payment, if you're receiving a gift from a friend or family, much like when you qualify for a mortgage, you're going to need to season those funds. And so if it's cash under a mattress, they're going to want to know where it came from. If it's a gift from grandma, you're going to need a gift letter. If it's been sitting in the bank for 2 months and you can trace those funds, that's all the bank is looking for.
Perfect. That's great to know as well. Yeah, we've seen that where it's like, hey, we're proof where you got it from. So perfect. Well, if anybody has any questions, go ahead and type those in the Q&A section at the bottom. In the meantime, we do have 2 new bread listings this week. We've got one in Southern Louisiana, which is one bread route selling at around $140,000, which is 32% of revenue. They make just over $8,000 weekly, and then the operation services 9 accounts on a weekly basis. And then our other bread route is in Western Florida. Again, it's one route, selling for $165,000 at 23% of revenue. It's got $13,500 in that weekly revenue, and it services 23 weekly accounts. And there's also a vehicle available for an additional purchase. So if you're interested in purchasing the vehicle off of the buyer, you can pay a little bit more and get that. So those are our 2 listings we've got this week, which is very exciting. And let me check real quick to see if we've got any questions. Does not look like we do. So I will go ahead and say too, if you are interested in learning more about the bread space, this is something that's interesting to you, we do have our Bread 101 course on our website. It is free. It's just a little taste in the bread industry to see if you are interested or not. And then if you do think that you like it, you're like, man, I really want to learn more about this, we do have our Bread Summit on our website as well. So you can get the summit, watch the summit. It is a virtual course. And basically at the end of the summit, it's designed to see if you want to pursue this industry, this space or not. Also with the summit, you do get to do an in-person workshop at our office here in Nashville, where you get to meet our team, the route consultant team, as well as industry experts, and ask any questions that you've got. So it can be a really great learning experience as well. And both of those are on our website. And again, if anyone comes up with any questions, like if you're watching on YouTube or if you're here right now, and there's just something you didn't think about, and you think about it later today or in a month or whatever it is, feel free to reach out to us at info@routeconsultant.com, and we will do our best to get all of your questions answered. And it looks like, yeah, we're still good on Q&A. So it looks like that's it for today. Thank you, Stephen, for the excellent information. like I said, financing is always a really hot topic, and we'll see everybody next week.
Thank you, Leah, and we will see everyone next week.